it's not justified that a stock market is rising to where this was before it all started, when tens of millions of people are unemployed and businesses are shuttered. It's not right. The Fed is doing this. They're buying ETFs and they're buying Dow and S&P futures. They are propping it up. So if we see that happen and a rush to safety, pushing interest rates lower, at a time when the stock market's tanking, the Fed and the Treasury crank up the printing press, you could very quickly see the bond market turn over. And if you have the stock market and the bond market moving south at the same time, which is very unusual, because remember, traditionally stocks and bonds are inversely correlated. They said stocks are risk on, bonds are risk off, but because of interest rates being at the lowest level in human history, they are now positively correlated as it relates to interest rates. If interest rates move up, they both collapse. And that could happen. And when that does happen, there are very few places on the planet Earth other than precious metals to safely put your money. The easy answer would be to go to cash. But is it really easy when the Fed is creating so much inflation in the system that will manifest itself into real price inflation at some point? Is it a good place to be in cash, out of harm's way? The alternatives, the places to safely put your money, are becoming harder and harder and harder to find.
Welcome back to Liberty and Finance and Reluctant Preppers. We have a returning guest, Andy Schectman, the CEO of Miles Franklin Precious Metals Investment, is back here with us this Tuesday, May 26, 2020. Andy, thanks for joining us again.
See you again, done again. It's good to be back.
It's been several weeks since we had you on, and a lot has changed. We've seen trillions more coming out of the Federal Reserve and promises of more ahead of that, and yet we're still continuing to get calls from very nervous individuals saying, I don't want my retirement subject to whatever whim is news is going to break overnight. So could you bring us up to date over these last maybe 2.5 weeks since we've had a chance to visit with you on what you're seeing shifting in the environment, I guess economically, but then bring it home to what you're seeing on the ground as within the precious metals market and the supply chains related to that, so give people an understanding of what you're seeing developing.
Yeah, absolutely. Well, other than a real serious need for a haircut, everything on this side of the table has been all right. The business that we've seen, that we saw in March, which was probably 15 to 20 times normal business volume, has tapered off a bit, and that's to be expected. There's optimism in the air. There's hope spring eternal in the air, and with that, you have a stock market that forges ever higher, which to me is somewhat surprising that it's almost as high as it was this time in 2019. And of course, in 2019, we didn't have tens of millions of people unemployed and a Federal Reserve doing all that they can to water down the money supply. But that type of mentality is also spilling over into this industry. And done again, and what we're seeing is a little bit of a pullback from the craziness that was March. It's still 3 to 5x from what it was, but it's really tapered off a bit, and it's not manic. It's not working till 2, 3 in the morning type of deal that we saw in March. But I would say to you that I don't see too much that's changed in the supply landscape since March. Now, granted, there are an opening of sorts of the supply chain, a little bit, as it pertains to gold mostly. And we're seeing premiums come down a bit, availability loosen up a bit in gold, but really not so much with silver. The United States Mint is still way back ordered on all their silver eagles, and their premiums are ridiculous. They're within spitting distance of the all-time highs. The same is true with all the premium coins, the Maple Leafs and the Philharmonics and the Kangaroos and the Britannias. Are all trading at very high premiums, and availability is tenuous at best. We're able to get it. We've been able to stay ahead of it, but we're paying more than we've ever had to. There are delays that really make me nervous. If we go back to March, we operated under the same assumption that we operate under today, and that is that when we place an order from the mint or from a distributor, that we get it in a week or two. And March proved that that doesn't always happen, no matter how good your best intentions are. The United States Mint and the Canadian Mint being the two main culprits, accepting orders and closing down, and with all of our open orders on the floor in those two facilities. Now, fortunately, we're up to date on all of those orders we did in February and March, and there's no one waiting for product any longer. But it's the same thing all over again. Here we are looking at the United States Mint, and they're back ordered again. They are allowing us to make purchases, but they're back ordered. I'd say to you this, Dunnigan, we are one event away, one real big event, or a second wave away from being right back where we were, where it doesn't take but a surge of demand like we saw in a 24 to 48 hour period in late February that culminated with everything disappearing. We're one event like that away from being right back where we were. And it's interesting because so often I would get comments from people saying, darn it, I should have done this a few months ago. I've been thinking about it. Prices were cheaper, things were calmer. Now I can't get anything. Well, now you can get things. Premiums are a little better, still higher than most people would be comfortable with, but better. And I guess I would simply say to you that in my gut, I feel like this is the last train out. I feel that this is the two-step forward. What comes next? Is it a couple more steps forward, or are we going backwards? And if we do go backwards, I think the fear will take over again. It will supplant the optimism, and very, very quickly we'll be right back to where we were with major supply chain imbalances, major delivery delays, higher premiums, and increased demand from the mainstream, which has really defined this whole movement that we've seen over the last couple months, and that is participation from the mainstream. I guess I'd say to you this way. Since things have calmed down, the one thing that hasn't calmed down is participation from the mainstream. The gold bug, the people who have been doing this for a long time, the choir, they're backing off a bit. They're optimistic. But the mainstream, the big money that was locked up in the stock market all of these years, enjoying the asset price inflation courtesy of the Federal Reserve since 2008, I think that really did a number on them. Watching their wealth vaporized by 40% in early March, I think really did a number on a lot of these people. And the one thing that is very different to me this time, more than any time I can ever remember in the 30 years I've been doing this, is the mainstream, the people who have never done this before. Entering this industry. And that hasn't changed, and that really hasn't slowed down. So to me, I guess I would say that the choir is expanding deeper into the audience. This is an opportunity for those people who waited for premiums to come back last month, maybe to dip a toe back into the water, because again, my biggest concern is that we see something, an event, anything that just renders everything that we have gone. I did $1 million order today, this afternoon, and I had the option of emptying out all of my silver inventory, or calling the client and asking him if he minded that I get the stuff, because this was an IRA. If I get the stuff and it comes in 2 weeks, he said he was okay with that because it was an IRA and it was going to be held in a depository. But the point is simply this. $1 million would knock out my available inventory, and now I would have to go and buy more and continue the cycle of it coming in. So the point of it is, Dunnigan, is that we're still very tenuous and very fragile and fractured at best in a supply chain that normally I could do 30, 40 times that and not miss a beat. But I'm concerned that this is really not a whole lot of a better situation in terms of supply, just a little bit of a better situation in terms of our hope and our optimism and where we hope things are going with the economy at large.
And I, like you, have seen some of those sky-high premiums back off just a bit, maybe by 1/4 of what they were at the peak. So people and availability, some of those delays reducing, where we were seeing 8 to 10 weeks on some products, and now down to available, like for immediate shipment in some cases. So for people who were feeling like they missed the train, and I should have loaded up when I could, or for the last 6 years, this may be a calm before the storm.
It feels that way to me. Because I called a couple of the largest distributors in the world today and asked them their availability. And what I got back was, yeah, we have Britannias available, but nothing else. And everything else is back ordered. And this is what you ought to buy, the Britannias. And, when you get comments like that, if you read between the lines, it means that the largest, most active players in the marketplace that normally have enormous, huge databases of supply are down to virtually nothing. And if you want to jump in and buy Eagles or Maple Leafs on behalf of your clients, it's the same thing that we saw in February and March that we all were criticized for. And that is accepting an order, telling a client it might be a week or two, and it turns out to be 6. Why? Because the mint shut down and something unforeseen happened. And I guess that's really the moral of what I'm talking about here, is that deep down I'm waiting for something unforeseen to happen and to be right back where we are. And I hope I'm wrong. I really do hope I'm wrong. I hope things go back to normal, and supply is not an issue, and it's business as normal. But right now, it's not. When I call the largest distributors in the world just to see what they're doing, and I'm told that all they have are Britannias, no rounds, no junk silver, no Eagles, no Maple Leafs, that's not normal by a long stretch. Now, what do we have in stock? We have some Maple Leafs, we have some Kangaroos, we have some junk silver, but not a lot. And not a lot by any stretch of the imagination, enough to fill $1 million order. But then what? Then we're right back where we started. We're continuing the cycle of continuing to bring things in as we're doing, but we're one event away from a roadblock, making that all but impossible. And again, when the largest distributors in the world are having these problems, it's a precursor, I think, to problems ahead. I really do believe that.
We have a lot of questions that have been submitted by our viewers, and I notice in reading through these that there are some major themes that are just emerging from this. I mean, like it all sorts down into about 4 themes. One of the themes is about the concern, and I completely understand this right now because we've seen in such a rapid period of time, just the last quarter, calendar quarter, our world go from what seemed like the normal to us to all kinds of restrictions and laws just erupting out of nowhere. And people are concerned from a precious metals ownership standpoint of how the landscape could change legally or from our freedoms and our liberties around precious metals ownership. Here's one example of those, and this one's going to have to take the place of about 10 that are in the similar vein. Where Waves asks, I've been a believer in sound money and concerned with the future regarding our freedoms lately. This includes moving us into a digital currency. What are your thoughts on the chances that we will be unable to take advantage of our responsible choices due to tyrannical laws forbidding us to trade or sell gold and silver, or forced to buy back at a predetermined price, perhaps? I realize the future is always uncertain, but I'd like to hear the opinion from a precious metals insider on this possibility.
All right, well, I'd like to answer that in a few different ways. At least as far as digital currency, I think it's coming. I do. When Nancy Pelosi put in her House Subcommittee Finance bill a proposal for a digital currency, as far as I'm concerned, the handwriting is on the wall. They've wanted a cashless society forever. Back in the 90s.
On that regard, I have to show this picture that I saw. I took a picture of it. I was so glad I got to finally go get a haircut this week after 2 months. But people on the channel are going to be glad for that too. But this was on the window facing out of the haircutting place that I went to. I'll put a picture of it up. See that circle? Yep. That's a dollar bill that's being crossed off there. Contactless payment preferred.
It's coming. And it's funny because people would always talk about that in the 90s, and I could never wrap my head around it. I've been doing this since 1990, and I could never wrap my head around a cashless society. How would they ever pull that off? Well, it seems to me that they have. It just took a little bit of blockchain technology and everyone having a smartphone on them to even be able to attempt to pull this off. But indeed, it looks like I think they will. We will, in my opinion, go cashless. And as I've talked about on every single show that I've been on yours, the Tier 1 status of precious metals, the reclassification of gold that happened a year ago, April, to me, sets the backdrop for the underpinning or the backbone of a cashless society, of a new system. I do believe that will happen. As far as it all plays out and how it plays out, I'm not sure. But let's talk about the confiscatory side of things, and let's just think about that for a minute. Desperate governments do desperate things. Yeah, they do, and I believe that. And anything can be changed. If the United States has any intention of retaining its status as world reserve and center of free trade, that would be a checkmate move at best. It would be game over. At that point, we probably have all bigger problems to worry about if our government is imposing Venezuelan-style nationalization of assets on their own citizen base. Could it happen? Yeah, absolutely. I mean, the eminent domain clause says they'd have to pay us something fair. So for those people who have a bunch, you would like to hope you'd be rewarded for your foresight at a justified price. Of course, President Roosevelt, when he confiscated in gold in 1933 at just over $20, then revalued the dollar or the price of gold to $35 an ounce. And therefore, anyone who held gold increased by 40%. Those who gave it up got a 40% haircut. All of these things are possible, but I've always fallen back on one thing. To me, I think if you want to talk about confiscation and the government being able to have their cake and eat it too, look no further than the tremendous, massive inflows of gold and silver into GLD and SLV right now. Huge inflows to the point where SLV is the second, I believe, the second largest stockpile of silver in the world. And who's it administered by? J.P. Morgan, the ultimate fox guarding the henhouse. HSBC Bank, right up there, number 2 in terms of tyrannical, deceptive entities. Well, they're the administrator of GLD, the second, third, fourth largest stockpile of gold in the world. So on a Friday night, we all go to bed with, let's say, $1 million in each account. You wake up Monday morning with $2 million in your money market account, and the government says, what? We didn't do anything. All we did was close these accounts, as the prospectus gives us the right to do. They'd be sitting on a tremendous amount of gold and silver without violating any civil liberties, without breaking any laws. And they could look the world in the face and say, hey, we didn't do anything. We didn't steal from our citizenry. All we did is close 2 funds. The prospectus gives us this right. You can still own gold in the United States. Go buy gold eagles from the U.S. Mint. The point of it is that I think it would be a very, 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 very bad move by the U.S. government to start to go down that road. And once they do, there's no turning back. They would have no aspirations at all, in my opinion, of retaining world reserve currency, being the center of free trade. If our creditors feared that type of nationalization of assets, they would dump everything like that. You'd see interest rates go to the moon. You'd see the dollar plummet. While I understand what your listener is saying, and I think it's something to be concerned about, slightly, at least in the back of your mind, I think in 1933, when gold was confiscated, done again, everyone owned it because it was currency. So when President Roosevelt activated eminent domain and took gold from the public, it was justified because everyone had it. Now, 1 out of every few hundred people has ever held a gold coin before. The backlash that it would create internationally, to me, is not justifiable to the small gain that they would get by taking people's gold and silver when they could have huge stockpiles in the ETFs sitting with a pink bow wrapped around them that are administered by the cabal commercial banks. So I'd like to hope it doesn't happen. While I understand what your listener is saying, I would like to hope that won't happen, and that's one of the big reasons we own physical and hang on to it ourselves and remove that counterparty risk of an intermediary that holds our gold for us.
You've mentioned a couple times in the past, and this is a common theme of people that I've spoken with who've called about their personal priorities around acquiring physical metal, and that's privacy. That there are absolutely methods for acquiring it privately at this time still, and if you stay away from certain types of transactions, it can be entirely private, and you can even store it privately. Can you just recap for people what are the key points for people who are really concerned about privacy that they want to keep in mind?
Yeah, well, I mean, I guess IRAs would be something that would diminish your privacy in terms of holding gold. Look, when you write out a check or send a wire or do an ACH, that's it. That's the only form of reporting when you purchase precious metals. When you purchase precious metals, there is no reporting, period, if paid with a check, a wire, or an ACH. You take physical possession of it, and then it's gone. The transaction is over. And so I guess the loss in privacy in and of itself is writing out a check. There are other ways to retain your privacy and to accentuate your privacy. I'll give you an example. We've talked a lot about the gold to silver ratio. The gold to silver ratio is Um, One of the biggest anomalies we've ever seen in 30 years of business, at around 110 to 1, it's within spitting distance of its all-time highest distorted level, going all the way back to the beginning of time. You could trade gold for silver. Now, again, when you do that, most of the gold that would be sold would be reported to the IRS via the honor system. It would be the client's responsibility to report it. But the point of it is simply this. It's two separate transactions. So the client sells the gold to buy the silver. It's a reported transaction. The client reports it, says, I file for a loss or for a gain. It's over. What they do with the proceeds of that sale to buy the silver and take it back is their business. Now, they never wrote a check out for the silver, ever. And so they never sent a wire for the silver. So if someone trades $1 million worth of gold for $1 million worth of silver, it's a two-transaction event. They sold the gold. If they decided to pay their taxes as they're supposed to, it's on them. They file, they pay their taxes, the transaction is over. No one ever says what do you do with the proceeds of that sale. I would say none of your business if my accountant asked me that. But with the proceeds of that sale, you then buy silver that gets sent back to you. You never wrote a check out. It's completely and totally invisible. There are ways that we can help accentuate people's privacy. A like-for-like transaction, gold bullion for gold numismatics, retaining or moving the cost basis forward. Here again, the numismatics have no paper trail. There are ways that we can accentuate privacy legally. The most important thing is that we do that legally, and that's one of the things that we can help people do. But in general, precious metals is still a very private transaction, even if you're just writing out a check for your very first time. Because, look, there are no reporting requirements by the dealer or by the investor when they make the initial purchase, if paid for with a check, wire, or ACH. There are very few things on the planet where you can say that. Insurance, securities, bonds, you name it, stocks, bonds, insurance, banks, any of it. Tons of reporting, get to know your client, and paperwork up the wazoo that you have to fill out. Not the case with physical precious metals. It's one of the last few private things on the planet.
Another whole cluster of questions is all around the topic of how the physical versus paper price is separated, as evidenced by these high premiums we've been talking about. And I'll give you two kind of related here. One from Trixie McGee says, "Hi Andy, is there any registered metal at the COMEX? Why is the COMEX allowed to sell more metal than they have registered category? And are there any other developments happening this month at the COMEX?" Mikhail Kalishnikov says, How high can premiums on precious metals rise before the COMEX and derivatives start to unravel? Because that seems to evidence the fact that the premiums for physical, you really want physical, you're going to pay this huge premium over the artificially low paper COMEX price. So how far can that stretch before it breaks in everybody's mind?
Well, maybe we'll find out at the end of the month. It's a delivery month. Maybe, just like the Hunt brothers saw in 1980, that there's far more paper contracts than there are bars in the vault. That's rehypothecation, and that's something that needs to be resolved in order to have a fair market. The rehypothecation of the gold and silver bars on the COMEX create this type of an environment, whereby if everyone stands for delivery, you're going to have a default or a force majeure or a cash settlement. We're not too far away from that, I think. Premium is a function of supply and demand. The problems with the price on the COMEX being a poor measurement of price based upon the fact that they are allowed to rehypothecate or sell a bar or attribute a bar to multiple people is not right, and it creates an unfair price. And I think the people who have been accumulating it, maybe the Chinese, are probably the ones who are the happiest that it has been this way. It has allowed them to accumulate massive positions. It's allowed J.P. Morgan to accumulate the largest silver position the world has ever seen at one time with rehypothecated or held down paper prices. But it's creating opportunities. These distortions are creating opportunities. And I think the bottom line is simply this, done again, that traders typically will choose the path of least resistance. And the only way that you can only suppress or manipulate a market over time is to push it in the direction that it is going. For a very long time, no one wanted gold and silver. They just wanted U.S. equities and U.S. investments. They didn't want physical precious metals. But when the whole world is now looking to alternatives to paper and accumulating physical. It's a whole different environment. And, you put that in conjunction with what's happening now with the Justice Department, really seeming to turn up the heat a little bit on JP Morgan and on this whole silver manipulation investigation, gold and silver manipulation investigation. I think we're getting close. I think we're getting close to seeing the price explode, the real price. As far as the premiums, look, the premiums are a function of supply and demand, or lack thereof. And the distributors who have it are charging way more to release it than they ever have, because there's far less of it and far more people. Like I said earlier in the discussion, you have mainstream people throwing huge amounts of money, chasing fewer and fewer and fewer products. That's the definition of inflation. More and more money chasing fewer and fewer goods. Well, that's exactly what's happening. Those premiums have nothing to do with the dealers. The dealers, as you know, Dunnigan, now you can see the dealers have very little to do with these premiums. Our commission is consistent. Oh, it may go up a tiny bit or down tiny bit based upon market environment, but just to accumulate it, just to get it. If I had $1 for every time someone said to me in the month of March, how do you guys have product? No one else does. How do you do it? Well, I'll tell you how I did it. I had to pay a whole heck of a lot more than I ever did from the distributors who have it. So the bottom line is that's how it works in this industry. When nobody wants it, it's cheap. When everybody wants it and the supply chain is broken, it ain't cheap. And if you want to get it, you got to pay more. And the same thing goes for us as a company, or for the end user as a consumer. But I do think we're getting close to something very interesting on the COMEX, and it could be as soon as the end of this month. As if I were a trader, I'd stand for delivery, and I think a lot of people will. And I think you could see some very interesting developments. In fact, I do believe the Justice Department, the COMEX market has sent out some sort of an advisory saying that they're concerned about price volatility heading into the end of the month in silver. So beware, this could be an interesting end to the month of May.
We have a question here from Francis Wood, who said, not too long ago, ideas like negative interest rates and modern monetary theory start floating about, and then the next thing we know, it's in practice. By what authority escapes me? Now I'm hearing increased chatter about a debt jubilee. Of many questions, one is foremost. Won't debt jubilees become a wash, rinse, and repeat affair if Wall Street, the Fed, and the Treasury aren't forced to change their approach?
Well, of course it will, but I think that's just it. We're entering, I think, kind of the ninth inning in this. You can't continue to wash, rinse, and repeat over and over and over again, creating these major problems in the economies. I think we're getting to a point of debt saturation, and it's like pushing on a string as well, in the respect that this time it's different. Yes, there's massive debt and massive inflation created by the Fed's response to this and the Treasury's response to this. But this time I think we're heading down a different road. This time I think we're heading into something more like hyperstagflation, where depression meets hyperinflation. And I don't think it'll be pretty. I don't think we will be able to jumpstart the economy this time. How many businesses are gone forever? 10, 15%? How many industries will never come back? I'm not sure. Bars and restaurants and sporting events, largely, especially the ones indoors. What will it take for people to ever go back? These things, which I think are going to wear down the economy big time, and drag it down big time, are being staved off currently by a Federal Reserve that is creating an illusion of recovery, an illusion of prosperity on the rebound. And I don't think it's true. When you look at the stock market, it is screaming that this isn't true, that this is a fallacy. So I think we're getting to the point where those tools, the rinse, wash, repeat, they're basically going to be rendered useless. So I think we're getting to the point where maybe we see a whole new system, a debt jubilee that leads to a new currency system. One backed by gold, maybe a digital currency backed by gold, maybe a forgiveness of debt across the board, of all government debt, of all Western debt. You've already seen rumblings of us not paying the Chinese for the bonds that they hold of ours, for being less than forthright with their admission of what had happened with COVID. And now, if that were the case, it would be just as easy for all the Western nations to all at once forgive debt, go to a gold-backed currency since gold was reclassified, and a digital one at that. There's your cashless currency. There's your two-tier system in terms of currencies. I think you'll see a gold-backed Chinese yuan digital and a gold-backed dollar digital, and those will be the two systems that I think will compete with one another. That will be the end result, if I had to guess, of all of this debt unwinding and the destruction of the currency right in front of us through hyperinflationary policy by the Fed and the Treasury.
You've led me right into this question I wanted to ask you from Larry Engel. Says, we are obviously in a transition under the disguise of a pandemic, understanding that we are transitioning to a new financial system with precious metals and probably cryptocurrency as the underlying support. What do you suppose an asset such as a median-priced house will be valued? Will it be valued in gold, cryptocurrency, or dollars? Thanks.
I think it would be valued in the new dollar, a new dollar that is backed by gold to a degree. Maybe 20% of the new dollar has gold backing. I don't know exactly how it plays out, but I'll tell you this, that cryptocurrency has a role in the future, but that role in the future, I think, has more to do with the platform, the distributed ledger. I'm not going to say that one cryptocurrency should be preferred over the other, because really I'm the last person that should be asked that question. But I do think the distributed ledger, the backbones, the if you will, the rails of a new system would be distributed ledger, 100%. I do believe that. And I do think it would be backed by gold. And I do think it would be a new dollar. All of these things would come into play, but it would be valued in the currency of the realm, how the currency of the realm is valued in relation to its gold backing and what role the distributed ledger has in bringing that to the public. Well, I'm not quite sure about that, but when you take a step back, it seems pretty logical that would be the road we would head down in the not too distant future.
Related question here, again, back to real estate, and this is asking just your opinion based on macro factors that you're seeing unfold, and that's people, the real estate market, like the equities market, got to where it got to because of supply and demand imbalances and easy money and low interest rates and that kind of thing. Now with 40 plus million people out of, unemployed, and the question is, are we heading into, and also with commercial real estate likely to take a nosedive with so many businesses closing, as you mentioned, and I know Danielle DiMartino Booth has written about this, but Lobi Dosser asks, is it best to wait before buying a house? So that's a very specific question, but just in general, what do you see the macro picture of real estate as an asset? Because, you deal with precious metals as an asset. Real estate is also a real thing. But are the factors that affect that, like employment and so on, going to put a lot of pressure on it, and business closures going to put a lot of pressure
100%.
on it?
I wouldn't buy property right now at all. I think that you will be able to get it at a much lower price in the near future. If I had to guess, what happens is that leading into the end of the year, I would expect to see, especially if we see any resumption whatsoever of COVID, a rush to safety, pushing interest rates even lower heading towards the end of the year, which if you take a look at the federal funds rate right now, the futures have that going negative into the end of the year. In other words, the futures market sees negative interest rates by January 2021, which is shocking. But needless to say, when you look at what the Federal Reserve and the Treasury are doing, creating so much money, it took this country 300 years to create $800 billion, and in the past couple of months, they've created $6 to $7 trillion, which leads me to my point. I'm concerned that the bond market turns over, because the people holding these bonds will be afraid ultimately that they get paid back in watered down dollars. And so I think that you could see the bond market turn over and interest rates rise, ultimately interest rates rising, and they have to at some point, unless they go deeply negative, they have to rise. But when you put it all together, you have baby boomers retiring. You have interest rates that might go lower for a little bit, but ultimately have to rise. And an economy in shambles, there'll be a lot of people who will just walk away from their mortgages. So at this point, yeah, I would not buy property. I'd sit back and wait. I'd be as deep in cash as I can. I wouldn't be tied to any type of financial asset like that. And I'd wait and see how it all plays out. These are deep, deep uncharted waters we're swimming in right now, and again, and I think that real estate will be really affected by all of this, maybe more so than most asset classes, because quite frankly, the easy money and the low interest rates that the Fed has created since 2008 has created massive bubbles in real estate too, distorted asset prices, not just in stocks and bonds, but every bit as much in real estate as well. So yes, I would wait, let this all play out, and I think you'll find that real estate, you'll find bargains before this is all said and done.
We have a related question from Deerfly Guy who says, given the physical precious metals are the safest place to park one's personal private fortune, and that physical precious metals are becoming more expensive to buy and harder to find, in your opinion, what is the next best place to park currency?
It's a tough question. I mean, think about it. If you're in an environment where the stock market is overvalued and turning over, and in my mind's eye, I see the bond market doing the exact same thing. In other words, I see by the end of the year, if we see this thing come back with a vengeance, as a lot of people say it will. Now, I'm not a pathologist or an epidemiologist. I have no idea. I just know what I read, and they all say there's a second wave on the way at some point. Okay, if it does come back, you'll see a stock market collapse. It's not justified that a stock market is rising to where this was before it all started, when tens of millions of people are unemployed and businesses are shuttered. It's not right. The Fed is doing this. They're buying ETFs and they're buying Dow and S&P futures. They are propping it up. So if we see that happen and a rush to safety, pushing interest rates lower, at a time when the stock market's tanking, the Fed and the Treasury crank up the printing press, you could very quickly see the bond market turn over. And if you have the stock market and the bond market moving south at the same time, which is very unusual, because remember, traditionally stocks and bonds are inversely correlated. They said stocks are risk on, bonds are risk off, but because of interest rates being at the lowest level in human history, they are now positively correlated as it relates to interest rates. If interest rates move up, they both collapse. And that could happen. And when that does happen, there are very few places on the planet Earth other than precious metals to safely put your money. The easy answer would be to go to cash, but is it really easy when the Fed is creating so much inflation in the system that will manifest itself into real price inflation at some point? Is it a good place to be in cash, out of harm's way? The alternatives, the places to safely put your money, are becoming harder and harder and harder to find. Any place with safety. I guess the next best place to me would be farmland.
That's what I was going to say. Rick Rule said the same thing. He said really high quality upper Midwest farmland. Yeah.
That to me is the only place, because it you can sustain yourself and it can generate income. And it's a real asset. And in recessionary times, farmland does well. But to me, that's the only place I can think of, honestly, where I would feel comfortable parking my money, period, outside of precious metals. And I hate to even say that, because people might think I'm being less than genuine, but I'm not. I am 100% serious. I can't think of any place I'd rather put my money than precious metals, and secondarily, a paid-for farm that I wouldn't even mind going and living on these days. So I think that's just, to me, those are the only two places that even kind of fit the bill.
Well, I guess we should, at the end of this, give you a chance to just give people a sort of a personal message. We've all been through a really tough time over this last several months. We don't know what's ahead. We're all in this together, clearly, and get the feeling that there are, I guess, evidence of bigger forces than our individual selves at work, that we're kind of, as you mentioned, swimming in deep waters, is a good way to put it. Just any personal message that you want to offer people before we let you go.
I don't know, partnering with guys like you, the Rick Rules of the world, the David Morgans, and the Vic Swears, and the quality people kind of emblemize what I strive to do. I strive to be accessible. I strive to be accountable. I strive to help as many people as I can and partner myself with really good, solid, quality people. Because in the end, you're right, these are uncharted waters. No one knows exactly how it all plays out. But we're all doing our best to help, to spread the word, to allow people to prepare, to do it with integrity, to do it with honesty. And, I'm getting a little more sleep these days. In the month of March, I was working almost 20 hours a day to do just that. And I guess, Dunnigan, if I'd leave your listeners with one thought, is that as heaven is my witness, I believe those days are not too far behind us and perhaps coming back sooner than people think. Use this opportunity to stock back up on food, on water, on supplies, on precious metals, on some cash, get some cash out of the cash machines, out of the bank, and hope, just hope, that that was all preparation for not. And because if this is a lull before the storm, I think people will remember that, and they'll be sad that they didn't take this time to reluctantly prepare. And no matter how optimistic we want to be, we need to prepare and for what's coming, because March proved to me one thing, that in 30 years I'd never seen anything like it, ever. And quite frankly, I don't think we're too far removed from it, at least from a standpoint of supply in this industry.
The other thing you made me think of when you were going down the list of things that we should do in the lull time to be prepared for the harder times is to work on our own, obviously our spiritual well-being and our physical well-being and our strength. I know having my one son who was away at a college assignment, and that college got closed and he came home, he's been challenging me to get back to workouts. So I'm trying to take better care of myself, trying to get enough rest, taking vitamin D, vitamin C, zinc, things like that, just trying to get our diet back onto even keel. So repairing things that need repairing. So all those things of kind of the work that you do to get ready for a challenging time is the right thing to be doing. So
100%, and I do believe that, and use this time to reconnect with your family. To me, that's been the biggest blessing of this all, right. And it's been great. I've enjoyed being with my 3 kids and my son, who's supposed to be at the University of Michigan. It's been great, and I've tried to find positives in all of this chaos. And thankfully, the golf courses are open here in Minneapolis, so I'm able to get a little bit of vitamin D.
A little bit of vitamin D.
Take my mind off of what's going on. But look, the bottom line is this, Dunnigan. I will be here tirelessly to continue to do this, to support your listeners, to support Miles Franklin's clients. I pride myself at accessibility. I can be reached at Andy at Miles Franklin. I will reply to emails. We will do the very best we can to beat any price in America. And give us a try. We're licensed. We're bonded. It's the only state in the country that mandates licensing and bonding in the industry. And we've never had a customer complaint, and your listeners certainly won't be the first. So I want to say thank you from the bottom of my heart for giving me a platform over the last couple of months to communicate with people. And it's been a wonderful experience. I welcome people to reach out to me with any questions or comments. And I'll look forward to coming back with you, hopefully after a haircut this time and in the next week or two, and see what's going on at that time.
Thanks, Andy Schectman, for joining us here on Liberty and Finance and Reluctant Preppers this Tuesday, May 26, 2020.
Always good to see you, Dunnigan. You take care, buddy.
You too. If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.